I'd like to now, just coming up to the final session of the afternoon, which is a panel, and would like to introduce to the stage Andrew Weaver, who's a consultant at Legacy Consulting, who will be facilitating the panel. So, Andrew, please come up, and I can let you introduce the panellists themselves.
All good. Thanks, Steve. Thanks, Owen, for your presentation. As mentioned, I'm Andrew Weaver. I'm an independent consultant. I've been working in payments. It's a bit scary. February next year will be my 30th anniversary working in payments. Started as a COBOL programmer, believe it or not, with the then National Bank, and served my apprenticeship with them. And since then, I've been doing consulting and professional services work around lots of places. Really, really lucky to have been involved in some pretty cool projects. But anyway, it's enough about me. Can we have the panellists come up, and as you do, we will introduce you all. Yeah, so all come up and introduce you on the way. So first, as she comes up, this is Roxanne Sultan. I would be surprised if there's anyone in this room who doesn't know Roxanne. I don't know, she comes with a bit of a reputation. Currently with ASB and head of digital strategy and planning for the last couple of years. Prior to that, involved in a big toy box at Spark, from what I hear, looking at digital ventures. So always to the forefront of innovation in this sector, and always entertaining and interesting to listen to as well. We have Brad Gerdis from Smartpay. He is the Managing Director and CEO of Smartpay. Before that, he had several ATMs, ran an ATM business, or part of an ATM business, and also doing a lot of strategic consulting around payments. So welcome to Bradley as well. Then we have Jessica Ellerm, who's from Tyro Payments, who are mainly Australian-based at this point. And she is the Partner Development Manager, so we'll have some very good insights for us on this panel in terms of how to deal with partners. Been there since 2009, and includes, the Partner Development Manager includes 180, is that right, POS partners? So that's a lot of partners to manage. Yeah. And you're also responsible for a FinTech hub, so as we go through, I'm sure you will make some reference to that as well, and some lessons to be learned. Also, she is a radio star. You do some industry commentary and are part of a radio program as well. So here we go. Okay, next we have Weinert, and he's from Giesecke and Devrient, if I get that right. G and D to most people.
Giesecke and Devrient, yes.
Okay, close. But not quite. He's the technical director, and by technical, he really is the technical director. He has a master's in electrical engineering, so any technical questions are going that way. And also, I hear at the moment, you're not just the technical director, but you're actually the managing director for Australia at the moment, albeit maybe in a temporary capacity. So if you've got any deals to be done, now's the time. G&D, most of you will know that they've been involved in card issuance, personalisation for a long time, but also doing a lot of work around mobile payments and mobile payment APIs for business partners as well, so a lot of experience there. And last but not least, right down the end, we have Andrew Bates. Andrew is the Chief Technical Officer at Harmoney, peer-to-peer lending platform solution. You've been there for a couple of years, is that right? And is responsible for the technology vision, and technology being a core part of how that platform operates. Before that, a career in insurance and financial services. And you will see from the photos here that Andrew wins the Movember challenge already, because this is like, how many? 8 days growth? That's pretty impressive. Anyway, we're going to get right into it. I'm conscious of our time and conscious of drawing a lot out of the panel we've got here. There's 3 key things we're going to look at as part of this Dynamic Networks panel. One is how we go about supporting a progressive payment system, and we're talking in the New Zealand environment here. One is how we go about fostering innovation in a dynamic environment, how we need to do that. And the third point is talking about interconnectedness and efficiency, so how we go about managing that. So to start off with, New Zealand does have a reputation as being a market which is open for innovation and doing things collaboratively, doing things together. In order to build a progressive payment system, we need the elements of trust, we need the interoperability, we need the regulation structure, all of those sort of things. So over to the panellists, what do we need to do collectively to meet the challenge of the next phase of development? What do we need to do in this environment? Either immediate things that you see right now or things that we need to put in place to set ourselves up for the future. So let's start with Roxanne, just for fun.
What did I know that you're going to ask me first? Look, I think for me it's really important that as we create a lot more innovation in the marketplace around payments and forms of payment, it's really important to think about the customer experience around this. A lot of times we can be led with the technology and we forget how difficult it is for consumers to actually discover the form of payment that is there in the first place, how to use it, and where are the places where they accept that form of payments. And I've always been the customer advocate because I've seen so much innovation, especially in the payment space, through banking over the last almost 3 years and also through the telecommunication. The key factor comes back as to ensuring we have standards and we have and I really like the presentation from the last two speakers around ensuring that we have consistency across the board, because we're quite right, most consumers don't even know how many forms of payment we already have, let alone what's coming through into the marketplace. So for me it's really important that we have the consistency and that in whatever we do in terms of innovation, that we always start from the consumer and not the technology.
Great. We'll might as well go down the line. So
Sure. Look, Andrew, I think collaboration and innovation really go hand in hand, and like a lot of things, it comes down to just simple supply and demand. If you look at where the demand for innovation is coming, it's very much a recognition of a lot of the existing incumbent players who are typically the larger financial institutions who are looking to meet a need or perceived need of their customers. That might be consumers, it might be retailers, it might be other businesses. And so they have a franchise in needing to and wanting to service those parts of the market, but quite often not necessarily the best capability on an innovation point of view. So that's on the demand side. On the supply side, and if you look at where innovation typically seems to be coming from, it's more the newer entrants, the nimbler players. But unfortunately, it's not good enough to simply have the best technology. You've got to get it into market. So that's where you have that supply-demand dichotomy. And the importance of the collaboration is being able for the supply to find itself to the demand, and for those newer fintech type companies to be able to engage in the market in collaboration with the existing players. The existing players quite often have a guardianship, if you like, of the existing infrastructure. And it's not so easy for new players to access the new infrastructure without going through the existing networks.
Thank you.
It's a huge question, and I was trying to think through how I would answer, and I obviously don't know a lot about how things lay out here in New Zealand, but in Australia, one of the things I think is really interesting, if you were going to design something from scratch or you were thinking about rebuilding it, is not look at banking instruments in silos. So I think in the past we've had this tendency to say, well, this is how payments work, this is how current account works, and this is how lending products should work. But actually they kind of all feed off each other. And the best system for a consumer or a small business is when all of those completely connect and work in a way that is truly seamless. And from a partnerships perspective, when you're starting to pull other players into there, aside from the financial companies, you actually want to start thinking about the accounting providers and the point of sale providers, and how do all of those pieces connect to each other. And then I think you have a really strong system.
Right. Thank you.
I know this is the network panel and not the customer experience, but let's have a look on that from the customer experience point of view. If you talk about real-time payments, for example, instant payments, yes, there's a lot of complexity with it in regards to risk and so on, but just see on what this can offer for the consumer, right? The features that come with it. So you can have in-app payments, you can have these lock and block features, you can have cardless cash and these things. So I think from a consumer perspective and not so much from a technology perspective, this is just big innovation to come and brings many, many benefits.
And I think that's right. The customer experience, people don't want to go to a bank to get a loan. They don't want to go to a company like Harmoney to get a loan. They want to buy a house or a home. They want to get a car. They want to have the experience. And so one of the challenges for us as a company is being able to allow people to transact today, get their money today, and take part in the experience today. Not have to wait or plan ahead 4 days. I think that's one of the key things for us is actually trying to make sure that the process is as streamlined as possible. If we can get somebody to turn up to our platform, we can do Know Your Customer, we can do AML, we can make sure we know who you are and where you live and how much you earn and how you spend your money. We can find all that detail out and get you a loan, but then it will take 3 or 4 days to get the cash out to you. And that's a bit of a gap for us, is that if you apply for a loan at Harmoney, we can do a lot of those things on Friday night, but we can only get the cash to you on Tuesday. It's not a great customer experience for our customers. Coming here today, got in an Uber, got out of the Uber, said thank you, and 2 minutes later there was a receipt sitting in my inbox. It's a great customer experience. I don't have to worry about fiddling around with a paper receipt. I don't have to worry about signing anything. I don't have to worry about him logging on to an EFTPOS terminal. It's just done. Just nice, it's easy, it's seamless. Don't really care about how it's done under the covers.
Yeah, picking up on a couple of points there, and I think coming straight from your one there, Andrew, there's a lot of bankers in this room and there's a lot of technologists in this room, and we tend to think in terms of payment and my customer wants to make a payment. They don't want to make a payment, they actually want to buy something. The payment's just the way they do it. And in some ways, the more we can get out the way and the faster we can provide the service, the better. So in terms of the infrastructure that we're dealing with at the moment and the environment, I'll sort of just open this up to anybody who's got a comment on it. What are the major challenges? What are the things we need to wrestle with right now? I know real-time payments came up. What are the things that we need to think about from a collaborative framework that have to be addressed now in order for us to meet that demand, which is actually already there?
Yeah, I think one of the things, certainly a theme we see a lot, is access and open access. New Zealand has a very, it might not be unique, but a very efficient payment system in the centralised switching infrastructure, particularly on a retail payment side, which is terrific because there is an access regime and it is relatively easy for new players to approach their central infrastructure and plug in. But as with all things, there's two sides to that coin. You have that benefit of scale in what would otherwise be a subscale market, but you also therefore empower a central authority as sort of guardian of access, and that in itself can be quite restrictive. And so what we're beginning to see is that New Zealand came a long way and led the world in coming a long way in that centralized piece of infrastructure, but it seems to have stopped for a while. And what we're seeing is, in order to innovate, it's not always so easy to innovate with a single gatekeeper, and increasingly people are trying to build around. And I think there's a message there that innovation doesn't stop; it needs to continue. And otherwise, people will innovate around the existing infrastructure, which risks reintroducing all the efficiencies that were probably cleverly thought about in creating that infrastructure in the first place.
That's a good point.
From another perspective, I also think we have to better understand the business models of new players entering into the market. And not only do the banks have to understand those business models and then work to collaborate with them and make it a meaningful relationship where both parties are going to prosper, but also the regulators have to understand those business models as well, because until they understand those business models and why those business models won't work maybe within the current regulatory framework, it's very difficult to move forward, and so then innovation stalls and it can't happen. And I think P2P payments are a clear example of that in Australia anyway. I know companies that have tried to do that, and it's not a case of technically it not being possible. It's more a case of the numbers just don't stack up against the current way we bill and process things, and also the regulators aren't willing to necessarily step out and force that change.
So it sounds like there's two things, because you're saying similar things in both of those. One is people innovating around infrastructure, which that sends warning bells off straight away. And the second one is the communication flows and how that communication fits between the parties. Roxanne, you got some thoughts on that?
Well, I was just going to agree with you around that, because it's hard for fintechs, but it's hard even for us as a bank to try to innovate within that. And I think, yeah, in a way, I think regulation and compliance and so forth, on one hand, we do understand why it's there. It's there to protect consumers. It's there for a purpose, so that people don't abuse of the system and then break the confidence that customers have within the payment systems. If we don't have if we don't have confidence in what we're doing, and when we're getting who we're giving our money to, and whether or not we're going to get the goods out of it, then we're going to have much bigger problems to deal with. So on one hand, I absolutely understand compliance and regulation, and coming from a disruptive side, even when I was in a telco business, it was a pain in the butt. But on the other hand, it's also, I agree with you, the government and the compliance and all the bodies that are managing this need to be more agile, to move faster, because even within some of the things that we're doing in ASB in terms of innovation, we can't necessarily give it to our customers because we're still waiting for regulation to catch up. And a lot of times we're going to find ourselves in very uncharted territory where we have to take a lot more risks, and banks are much more risk averse when it comes to dealing with something where customers, they trust us first and foremost on security and trust. And if we lose that, then we lose the very core of what we're there for. So, it's frustrating for fintechs, but it's also frustrating for banks. So, I completely agree with what you're saying, and I think we need to find a way to, a bit like what the speakers were talking about before, is to work within each other and not wait for the regulator to necessarily make the change that need to happen, because a lot of times they don't even know themselves what it is that they need to adapt for, because the market is moving so quickly. Do they have to wait and see if there's a sort of a constant that will happen, or do they need to make changes on the go, whether or not they're going to be viable long term? So, I think you've touched a good point there.
The agile regulator.
Yeah. Isn't that an oxymoron?
That's where it's heading though, right? They'll have to be
possible.
agile. They have to.
Yeah, can I comment on that word agile? I mean, I heard that several times, and I think it's good to have agile developments, but for sure we can't have agile solutions or agile releases, right? That's just like the early Microsoft days, yeah? So you release something and yeah, it should be all right. And coming back to your point, Roxanne, here, it must be all right, and that's the main thing. So people and consumers, they need to trust into the payment system, and that's one of the basic fundamentals. And you can't break that trust, but by having agile developments, or let's say agile releases, we are not sure they are working. And that's the responsibilities of regulators as well, to make sure that's not going to happen. And what is released is secure, and is secure to people's money, right? That's more or less our responsibility here to the society.
Andrew, you got some thoughts on that too?
Yeah, along similar sort of lines, I guess. We're a loan organisation. We've got to take direct credit or direct debit payments. I'd say 10% of our customers are doing a customer-initiated direct credit get it wrong. They fat finger the numbers in. They don't necessarily know how much they're going to have to pay us. So we generally set up direct debits. I think it's a bit of a lack of, or a loss of control. People don't necessarily like that approach. I think in New Zealand we do something like 2.9 direct credits for every one direct debit, for probably that reason. But if we can't get customers to pay us, we can't pay our investors. And so we've got a two-sided marketplace. We have borrowers, investors, and so the money that they are repaying to us then sits in a clearing account that Harmoney has under trust, and it might sit there over the Christmas period, for example. It sat there for 9 days before it got cleared out and paid back to our investors. And so there's an opportunity cost in that. And so the opportunity cost for not having real-time payments is a slower moving economy. If we can get cash back out to people in a useful way, they can be turned around and spent again. And I think that was one of the things I found in the UK, was that the business case for real-time payments wasn't premised on replacing one technology with another. It was based on the flexibility and potentially the opportunity gains that could be made, as well as then the value-added services that came across it. And so if it's in the infrastructure and it's using the infrastructure, then it can be regulated and it can be controlled. If you're going around it and you're coming up with new ways of doing business, then you may lose control. And that's one of the dangers I see with not potentially keeping up with customer demand for immediacy. Is, Uber at the moment, you'll see what's happening in the UK today, or yesterday. Their drivers are now going back and saying that they should be on employment contracts.
Right.
It's happening in New Zealand too.
It's going to happen in New Zealand as well. So, we as a company, we do have a lot of regulation. We do, a surprising amount. Our investors and our borrowers expect us and hold us to a high bank grade standard because it's money. They expect it. The minimum standard for them is a lot higher than it would be for an Uber or a Spotify.
Yep.
I think that's a super interesting point that you make about actually the benefit is for the economy as a whole. Like, this is actually a huge big picture thing. And if you can just get payments moving just that little bit faster, you can get suppliers paid just that little bit quicker. The flow-on effects and ramifications of that to everyone is ginormous.
Yep.
And I think when you think about dynamic networks as well in the context of the economy and what role the government has to play, there is a direct relationship there between the government wanting to have a direct involvement in creating feasible payment systems that everyday New Zealanders or Australians can tap into.
Can I take us to the second part of our question, talking about making innovation work in a dynamic environment? Now, a couple of the examples we've given, there's an appetite for change, there's a need to do it, but how do we balance the incumbent need, the trust factors? David talked about it in his presentation, identification and authentication. Mark spoke in the CEO panel about safe, secure, reliable, those sort of mechanisms, the building blocks that we need in order for trust to be engendered in the system. We've also got some examples, and I perhaps want to ask the people who have been involved in those examples of an innovation hub type concept and idea. And we know that Visa and MasterCard do this as well. Marty over there in the background will tell you about it. About running the hackathons and having APIs published and made available that developers can come in and come up with those brilliant ideas that nobody else has even thought about yet. But it's in a controlled environment in order to do it. So perhaps, Jessica, if we could leverage maybe your work in your FinTech Hub, and then others of you comment as well in terms of how you see that happening.
Sure. So I might segue back to something Tyro did very early on that I think is driving forward what happens in the FinTech Hub. So, our direct proposal to point-of-sale vendors, the likes of Vend, Kanta, Nito, the guys that are running the software at the front of the bricks and mortar stores that we all shop in, we basically went to them and said, here are all our payment APIs. Why don't you build to them and build an integrated payment system direct with us? And let's remove any third parties from that conversation. We'll authorize, clear, and settle the transactions, and hey, you'll get a clip of that, and we'll also generate some income. So here's this great system that then sort of organically starts to evolve, and you have new point of sale vendors basically able to come in and access that information and those APIs for free and create new revenue streams for their business. So I think taking that next approach to where we're going with the FinTech Hub is we actually have a banking license now, so we're not just a pure payments provider. We're providing a co-working space for FinTechs, rah, that's all very nice, isn't it? But I suppose what a lot of them want in order to actually make their business viable is direct access into the core banking system. And so it's been really interesting to hear about what some of the banks are doing here. So ASB, those open APIs, is chatting to some of the guys in the room next door. That's just not really happening yet in Australia, and you guys are already progressing down that path here, which is fantastic. But a lot of the people that are sitting in that FinTech Hub at the moment are hoping to one day be able to tap into those open APIs.
There's a latent need, right?
Yeah, and eventually that will happen over time as those sort of mature. But I think fostering innovation is really interesting. You've got to build a community. There's a lot of effort going into building those communities in Sydney and Melbourne. You've got two big FinTech hubs in Sydney. You've got Stone and Chalk, which is a big bank-funded and government-sponsored initiative. And then you've got the Tyro FinTech Hub, which is probably a little bit more disruptive. And it probably caters more for those FinTech startups that are looking to more be at the disruptive end of the spectrum rather than the collaborative end of the spectrum. But hey, you need both for an ecosystem to work.
Cool. Roxanne.
I'll tap into that because I'm loving that you've selected ASB, although I hate that I have to wear this lanyard today. It's been very difficult for me. But the reality is, you're right. I mean, look, I've worked throughout, even in banking and throughout my previous careers in publishing in telco. I've been across innovation a lot. I've been sitting in a lot of hubs and a lot of organization and hack days and sleepathon and whatever they're called. And, you know, a lot of times the ideas that people come up with, 99% of them don't have a commercial viable model to them. They're based on technology, and a lot of times they say, okay, that's great, and how are you going to make money out of that? And they go, well, you know, from the days where we launched apps in telcos, and they used to come in and say, well, you're going to buy it. No, we're not. We can't. We're not a bank. We're not going to buy the app just so that you can make money. In the same way, the way we approach it at ASB is we go both ways. What's good for us is good for the fintech, and what's good for them is good for customers. And so we not only participate and encourage a whole lot of that innovation, but we help not only just support the technology, but understand the intricacy of the payment in the banking sector. Because I see a lot of these innovators that come in and they say, you know, I've got a fantastic product and so forth, and you go, okay, so how are you going to make money? And a lot of times they're just not quite clear about that yet. They just, you know, I'm just going to, it's great service for customer. And go, but if the customer doesn't want to pay for it, how are you going to sustain yourself? How's it going to work in the future? So we support them in helping them try to form the proposition well with customers, but also give them a platform to understand the banking system, why things are there in the first place, why are there regulation around certain areas that they think, you know, customers think it's a great idea. Yep, but there are some regulation in place for a reason. You know, if you're going to ask customers to give you their login and password, then automatically the consumers breach their terms and conditions with the bank, and guess what? Something happens. Who do I call? Do I call you? Because you don't exist. So who's going to pay me back for what's happened? And so a lot of the work that we're doing with collaboration and helping them is asking the tough questions. It's not getting all excited about the technology and wow, this is great technology, but it's applying in the real world and saying, how can we help you put all the other intricate parts around your business model and making sure that this is a viable proposition. By that way, we think that as ASB, we can actually not only help support something that we think is good for our customers anyways, but also help them understand and develop their ideas a bit further, so that it's actually good for everyone.
Yep,
so
it's good. So education component and
Yeah.
part of the giving back,
And look,
I guess.
and
That's
it's
part of
exactly
it.
what we're doing ourselves. I love, Yuli, that you've talked about, you know, card control and so forth. We do a lot of these, and in fact, yesterday, if you haven't looked on the Paymark site, we've just launched online FPOS. So we're the first bank that now you can pay with your FPOS directly on e-com sites that accept online FPOS. So if you haven't checked that out, you should. You know, and these are the things that we do, so we can absolutely work with them because we're in the same space. It's not because we're a bank that we don't innovate.
I'm conscious of our time and certainly want to give opportunity for a few questions. We have got another sort of set here, but I'm really wanting to see if there's any burning questions in the audience or any particular challenges or issues that you see that you'd like to ask the panel. Please do so now. If not, I'm quite happy to go on. No? See, you guys are great. So this don't create any questions. The last section, we're going to talk a little bit about the connectors. We've already started on it, what this community looks like and how it operates. So who are the trusted parties? Who are the collaborators, and how do we go about doing that? There's a question about level playing field. Is it a level playing field? And maybe that's just a good open question to ask each of you. Is it a level playing field? Andrew, we'll start with you.
I guess being a consumer of these services, we look for companies that are aligned in a lot of ways and to our interests and our size. We would love to have APIs to be able to communicate. We have two requirements. One is payments and the other is historical view of customer. We would like to see that people have a good payment history and don't have dishonours on their accounts and don't go overdrawn and all that sort of good things. Consuming that data is hard.
Yeah.
At the moment, our only opportunity is to use a technology out of the US. It's a screen scraping technology in most cases. It's not a great solution. So there are opportunities in there to collaborate and create really neat solutions that would drive New Zealand forward. I would like to say that things like Clever Cash, what a brilliant idea for social you know, in a way of bringing technology to kids, and I know people we've seen it. I'm hoping to get one at some point for my kids at home. But it's a great way of bringing technology to the kids and then teaching them about banking, about being socially responsible as well. So.
Cool, thank you. Billy?
I think we need to differentiate between evolution, that means improving the existing infrastructure, and revolution, coming up with a disruptive, completely new idea. And I think for the first ones, there is a plain and even battlefield. And I think fintechs even have the advantage of being a bit more flexible and faster than David's dinosaurs, right? So that is an advantage, and that's why they are doing so well in that spot. I think for the revolutions, you need partnerships, you need the big players, you need a critical mass to get something moving, right? So implementing new standards as a payment standard for a World Wide Web accepted by everyone, I mean, that's a real challenge. Yeah, and for sure, this playing field is not very easy for smaller companies.
I definitely don't think it's a level playing field at all. I think there are a lot of challenges from a regulatory perspective, and it's very hard, even if you have a great idea, to really cut through that and actually make something of it. And that's a really sad thing for consumers and for small businesses especially, because typically they're the most underserved section of the market, and there's huge opportunity. And I think when there's not a level playing field, yes, you have to have structural changes, but two, if you are able to think innovatively and creatively, there's huge opportunity for you to win in that space. So it drives you to work harder, but I think sometimes, definitely, I know in my experience, it does sometimes make you want to bang your head against a wall and think, why does this have to be so hard? You know, we're trying to do something great here. You know, can't people see that? And I think there are huge vested interests, you know, in the banking sector, and now we've got the tech sector coming into play, that those have to be really thought through and managed strategically at a government level.
Yeah. Cool. Thank you.
Andrew, I'd say payments is increasingly a veneer business. I think the guys that are going to win the race are going to win it in the last mile. And so if we relate that to, is it a level playing field? I think it's probably historically not. I think the legacy would say no. I would say that things like APIs, Andrew, that you were talking about earlier, are absolutely an example of the enablers that go some way to level that playing field. They're the keys to the otherwise locked gates. I think regulation plays a part as well. I don't think regulation is necessarily bad. I think if regulators do their job properly, they'll see themselves as enablers and facilitators of innovation. I think if left to commercial constructs alone, often things don't change at all. If you look at the Australian experience and the NPP, now that's costing a lot of people an extraordinary amount of money. But if the regulator hadn't pushed that, would it ever have happened? Well, probably not. And I think there's no question that faster payments is the future. It will increase efficiency, it'll reduce costs, and it will make the lives of communities better in any number of examples, and things like that just don't happen on their own.
Cool, thank you. And Roxanne, in 30 seconds or less, so that we beat the other group out to afternoon tea.
Look, I think it depends on the use case. I think in some cases, it depends what you're trying to achieve. If you're trying to disrupt the payment system, yep, I totally agree with everything you've said. But for me, payment is just a transaction to what you're really after. And so if it's easier for you to partner, then partner. Why reinvent the wheel? When I was in the telco space, we wanted to be a disruptor into different products and services. So it was easier for us to connect to the existing rails than to try to reinvent the wheel, even though we had 3 telcos together, we had the money, we had the numbers to do it. But we're New Zealand. We need to understand what's the point, and is that the actual, are we trying to disrupt payment, or are we just trying to get into a system that allows our customers to get to the product and services faster? And New Zealand's well done. It has breadth and depth for the size of our country of enough payments systems right now to service what customers want. So for me, it's an evaluation of each case scenario, what you're trying to achieve.
Great, thank you. All right, time is up. I'm going to hand back to Steve now, but I want to thank all of the panellists for their input.